How much money do you actually need to get started in self-storage? That is the question I'm answering today. Now, people oftentimes think that they need $100,000, $200,000, $300,000, even $1 million to get started in self-storage and buy their first storage facility. They're wrong. And honestly, that's the kind of belief system and mindset that keeps most people on the sidelines. Well, today I'm going to break down exactly how much money you actually need, what beginners get wrong, and how people inside of the Storage Wins coaching community are buying facilities, often with little to none of their own money. So stick with me, because there's something that's going to shift in the way that you think about this business, and it can be an absolute game changer for you. My name is Alex Pardo, self-storage owner, operator, and coach. I help real estate investors, small business owners, and W-2 employees buy their first storage facility within 6 months without using their own money. And before we dive into the numbers, I want to frame this the right way, because if we're going to jump straight into down payments and cap rates and occupancies and all that kind of stuff, you're going to miss the real opportunity. Okay, so here's the deal. Most people overestimate what they need and they underestimate what's actually possible. I want to repeat that because it's so critical that you capture this. Most people overestimate what they need, but they underestimate what's actually possible. And self-storage is one of the simplest, most profitable, most recession-resistant asset classes in real estate that I've ever seen, because it's an actual business with the benefits of real estate. You don't have any tenants. You're not dealing with nasty toilets, no 3 a.m., toilets broken, AC's broken. You're not dealing with those types of maintenance calls. You can run it with 0 employees, because I don't have any employees, low overhead, and huge value add upside and opportunity if you know what you're doing. And it does not take a degree. It's not rocket science. You don't have to have a super, super high IQ or anything like that. I spent years in the single family wholesaling business and made great money, but the business owned me, okay? And storage is what was able to give me back my time, and it can do the same for you. Okay, so let's start to get grounded a bit. Understand that more than half, about 64%, give or take, 64% of all self-storage facilities in the United States are still owned by mom and pop operators. So more than half are owned by a segment of the population in terms of ownership that they're not fully treating it like a business. What does that mean? They have outdated systems. They don't have a website, or if they do have a website, it's not really optimized, okay? There's no automation, terrible marketing, if they even have marketing, inconsistent operations. They don't understand revenue rate management, basic customer service, right? And honestly, owners that still have an AOL email address, believe it or not. These are the deals that I'm buying, the deals that the students inside of the Storage Wins community are buying. It's why storage is still one of the best entry points into commercial real estate. And I would argue this with anybody. Okay, now first, I think it's important that you understand that there's 3 basic facility types. Okay, and let's talk about sizes. First, you have small facilities, and small facilities can be anything under 50,000 net rentable square feet. Now, look, if you ask me, I consider small facilities under 12, 15,000 square feet is a smaller facility. But if you're just going to if we're going to put this into categories, think anything under 50,000 net rentable square feet is considered small. Medium would be probably 50,000 to 100,000 net rentable square feet. And then you got the big boys. And the big boys is what the REITs go after. The real estate investment trusts like Public Storage, Extra Space. They're typically going 100,000 plus net rentable square feet and up. I think for you, for if you're watching this, even for me, we're going to be playing in that sandbox of small to medium. And I find that most people are on the smaller side, under 50,000 net rentable square feet. All right. It's a great spot. That's where hidden opportunities live, because the REITs, the big boys, are not looking for 20 and 30,000, even 40,000 square foot facilities. Like I said, they're looking for the larger opportunities. And the larger the facility, oftentimes that means the operator knows what they're doing. They're dialed in. Not always, but generally speaking, that's been my experience. And the deal size matters less than the value add. Value add means what improvements can you make to the business? Can you make to the business to generate more income, which is is the biggest driver on the overall value of that business and the overall value of the facility. Okay, it's not based on comps or comparable sales where you're jumping on Zillow to see what the facility next door sold for. That's not what commercial real estate, the values are driven. It's off of the net operating income. And we get to force appreciation. We get to improve the value of these facilities, which has a multiple or an exponential increase on the value of the facility. All right. Now, let's start to have a conversation about money. Okay. And this is, I think, the part you came for here. Here's a question I hear all the time. Alex, how much money do I really need to get started in self-storage? Here's the truth, and this answer might surprise you. If you're going to go traditional, banks are going to want 20 to 35% down. And I would say most are probably going to be in that 30 to 35% down payment. So let's look at $1 million facility. That means you're probably going to need $200,000 to $350,000 down. $2 million deal, $400,000 to $700,000 down. $3 million deal, you're going to probably need $600,000 to $1 million down. And this is where most people throw their hands in the air, they wave the white flag, and they're like, peace, I'm out of here. That's not you, okay? Because you're with me today and I'm going to educate you on the real. Here's what most people are not going to tell you. You don't need to be the one bringing the down payment, ever, okay? Every single storage deal I've bought, and there's been numerous of them, have been leveraging other people's money or in how the deal is structured, okay? I think about somebody like Kate in our Storage Wins community who didn't have the 30% down that the bank needed for her to buy her first facility. So she got the money from 2 other Storage Wins members. Same thing with there's so many people I can point to that have leveraged other people's money. Okay. So now if you know how to find a great deal and structure it the right way, that is the game changer. If you can get really, really good at finding these opportunities and you understand how to structure it and where to get the money, everything else becomes easy and lines itself up. Okay, so I want you to have a mindset shift here, is that you don't need to have the money. You need a deal. You need an opportunity. So tattoo this in your brain, okay? Write it down on the back of your hand, on a piece of paper, type it out, whatever it takes. Money follows deals. Money chases deals, and money fights over deals, okay? Every single day and twice on Sunday. When you have a good deal, capital shows up. Private lenders show up, equity partners show up, sellers can oftentimes say yes to creative terms, especially when you're able to educate them on the benefits of seller financing. Banks will even say yes, even if you're new. But if you have a strong business plan and if you can show that you're an operator that can take the business from what it's currently valued at based on the income it's producing, and you can do what's called value add. You can improve the operations, add fee income, automation, marketing, and you could take it from this value to this value. They will oftentimes finance you. And if they can't finance you, you can borrow somebody's balance sheet. In other words, you can bring somebody into the deal that is strong on paper to make that the bank want to lend money to you. There's so many different ways to structure deals, and it's something that we go deep on inside of our Storage Wins community. I've seen this happen over and over again. So let me prove it to you. My very first storage deal, if you're watching me for the first time or listening to this, was $0 out of my pocket. All right. I found through a wholesaler who knew exactly what I was looking for, brought me an opportunity to buy a 43,000 square foot facility in Mississippi. The purchase price was $1.6 million. I needed 15% down to buy that deal because I decided to go with the SBA financing, Small Business Administration. So they gave me a loan for 85% financing. But I still needed about $350,000 to $360,000 to get into the deal, which I didn't have. I didn't have anywhere close to $350,000 to get into the deal. But because I had built relationships with people, they knew what I was looking for. They knew I was trustworthy. I was a strong operator. Even though this was my first storage deal, I was able to secure the funding I needed and brought him into the deal as an equity partner. $0 out of my pocket. Okay, I was the sweat equity. I found the deal. I managed it, I operated, etc. I mentioned Kate, no money, no experience, first facility, check. Now she's actually under contract on her second facility. Casey, same thing, leverage creative financing to buy not just one deal, not just two deals, 3 deals in 11 months. Okay. Example after example after example. This is not theory. This is happening every single month inside of the Storage Wins community. All right. So how do you do this? Because at the end of the day, you don't care about me. You don't care about them. You care about like, hey, how do I do this, Alex? And here are some of the best ways I think you can get involved is understand that seller financing, creative financing, it's one of my favorite tools. All right. Because so many of my deals that I've gotten, not just in storage, but single family deals have been creative financing. It gives you the opportunity to go in and structure a win-win deal, something that works for the seller, something that works for you. And you can go in and you can negotiate the interest rate. You can negotiate the down payment. You can negotiate the term. If you were to walk into a bank or call a bank, you can't really negotiate those things, but so much, right? Maybe you can get it down from a 6.5 interest rate to a 6.3, but you're not getting 0% financing from a bank where you can get 0% financing from a seller. I see it all the time, or 2% or 3%. So that seller financing is one way. Private money, okay? People want to lend on self-storage. People want to get involved in this asset class. The risk profile is lower. The operating expense ratio is lower. People see that technology and automation can handle a lot of the heavy lifting in storage, especially if you're trustworthy and you're a proven operator or you're somebody that can show the plan, all right? Equity partners, you bring the deal, they bring the capital, you split the upside. They get a piece of the deal, they get some of the cash flow. A lot of different ways to structure it. You have joint ventures, okay? Millions of dollars have been raised this way. Zero down creative deals I already touched on. So your job isn't to have the money. Your job is to know how to find a great deal, how to negotiate terms, how to analyze it properly, structure it cleanly, build trust with people, and know who has the money. Okay, it's not a how question, it's a who question. Who's got my money? If I'm gonna touch on and reference Grant Cardone. Now, listen, do that, and you're not gonna have to worry about funding. As long as you have a belief that the money is out there, even though it's not in your pocket or in your bank account or under the mattress or in the stock market, regardless of that, the money is out there. Get good at finding the opportunities and the deals, and the money's there. In fact, if you come across a great deal, please reach out to me. Okay, I might be interested in getting involved. If not, I have a network of people inside of our Storage Wins community, outside of it even. So if you find a great opportunity, bring it to me. All right, you know where to find me. It probably shouldn't be hard. And so let me start to kind of wind this down here. Here's what you actually need to start. Number one, you need to decide and commit. Everything begins with a decision and then a commitment and follow through. That goes with anything that you want to pursue. Number two, you're going to need clarity. All right. Why are you doing this? What is it you're hoping to accomplish? What does your buy box blueprint look like? What markets do you want to potentially go after? What is your value add criteria? As an example, for me, I don't like big construction projects, right? CapEx, what we refer to, capital expenditures. I was looking for a light value add, right? I'm not looking for a heavy lift when I was getting started. And you got to know your numbers. Number three is deal flow. And this is something we call deal discovery in the Storage Wins community. And this is where most people fail, is you need access to mom and pop storage owners. So how do you generate a deal flow pipeline, right? Leads and opportunities, relationships with brokers, relationships with storage wholesalers. We have our cash flow maps method that we talk about. There's direct mail, there's cold calling, there's the rent gap sniper method. There's so many ways to target these opportunities. These are things that we go deep and heavy on inside of our community, which, as an aside, if you want to learn more about that, storagewins.com, and just schedule a very short discovery call. We'll hop on a call. I'll ask you some questions, see what you're looking to accomplish, see if it's a fit, and we go from there. All right. Number four is confidence with deal structure and becoming a transaction engineer. This is what allows you to be able to close without having to use your money. Okay. Now, inside of our community, I teach something called the LMAO method. LMAO, and it's not what you think. It's L is for list building, M is for meaningful conversations with storage owners, lenders, bankers, etc. A is analyzing deals, and O is making offers. And this is why people within our community succeed, is because they're constantly generating leads and opportunities. They're having meaningful conversations because conversations lead to conversions, conversions lead to contracts, and contracts lead to cash and cash flow. All right. And then we analyze deals on a daily basis, and we make offers on a weekly basis. All right. So here's the real answer to the original question I posed at the beginning. You need enough money to find the deal and as little as $0 to close it. Okay, if you find a great deal, you can negotiate seller financing if the owner's open to it. And sometimes it takes a little massaging in terms of educating them as to why seller financing might make sense for them. They may or may not be aware. And we'll actually do a separate training and video and podcast on that very thing, the benefits of seller financing to the seller, okay? So much so, by the way, that I have sold 2 storage facilities and taken back a partial note. So love seller financing as a buyer. I also love it as a seller. It could make a lot of sense. So you find a great deal. You can negotiate seller financing. You can find a partner, an equity partner. You can get a private lender or private lenders. You can joint venture. And if you don't understand seller financing, you don't know how to structure it, you don't have access to money or think you don't have access to money, because for most people, this device I'm holding in my hand, and if you're not watching me and you're listening to me, I'm holding up my iPhone. For 99.9% of people, all the money you could ever need and want for a storage deal is in your contacts list. But that's for a separate video, separate conversation. If all else fails and you find a great deal, you can wholesale it. You can find somebody to be the end buyer, and you can make a nice chunk of change. I've made on the low end anywhere from $23,500 was the lowest I've ever made wholesaling a storage facility, and that was earlier this year. The most I've made wholesaling a storage facility is $150,000, and that's net, clean. That's no expenses. That goes into, that's a wire sent. That's clean. So what would an extra 23 to 150 grand do for you right now? Think about that, okay? And that comes from the skill of getting good at finding deals, of plugging into the right community that has deal flow and access to deals. Your value is in the deal. It's not in what your bank account says you have right now. Okay, so detach from that identity you might have of, hey, I'm broke or I don't have money. Now, look, if you have money, it just opens up more doors and resources for you. You just have more resources, and so it opens up more opportunities, I should say. Now, look, I've helped several people buy their first storage facility without any experience, in many cases without having money, not knowing where to start, like just getting stuck in the whole analysis paralysis section, all right? And I help you break through that. So if you want a deeper breakdown of how I bought my very first deal, how I've done seller financing, then make sure that you're subscribed to the Storage Wins podcast. Tap into my YouTube channel where I break these things down. And if you're serious about getting involved in this business and buying your first storage facility, even within the next 6 months, right? You can get your first storage deal within the next 6 months. Then there's probably a link below here where you can just book up a free discovery call, short call. And look, don't worry about building this portfolio, this storage empire. For most people, the first deal is the most important one, no matter how big or small, because that gives you the belief, that gives you the confidence, that gives you the momentum you need to carry that forward. And for the majority of people, you don't need 10, 15, 20 storage facilities for it to have a massive, significant impact on your life. You need 1, 2, 3, maybe 4 really, really solid deals. And even just one, the right one, can be a complete game changer for you. Okay, so hopefully you have found this valuable. Make sure you're subscribed. Reach out to me if I can help or serve you in any way, and I will catch you on the next one.